Hey everybody, this is Jim at SP500chart.com. It is January 6, 2014, about 4:15 in the afternoon. Markets have been closed for about 15 minutes, and I think we've got some things happening today that give us a little bit of clarity on maybe how to approach evaluating this chart. Before we look at it, I just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. Okay, looking at a 5-minute chart to start with, let's take a look at our symmetrical triangle that we identified over the weekend, because it wasn't until over the weekend that we had enough data to know it was a symmetrical triangle. And I know that seems kind of painfully obvious, but you have to. But sometimes you have to accept the painfully obvious and take it into your thinking and say, well, that's absolutely right. There's a tendency to always want to be able to make something out of the chart. Believe me, I always want to see something. I always want to find something that makes sense. Now, how did that move over there? I thought I had that thing placed just properly, so let me there. No harm, no foul. I thought I'd already done that. So anyway, like I was saying, there is a tendency to always want to find something that makes sense. And for example, if we don't look at the last 2 days of trading, if we just blacked that out, okay, that doesn't exist. I'll just go ahead and make it not exist. Then just looking at this, there's no way you can really say, well, I know what's going on here. You just can't do it. You could guess, but it would be purely a guess. Then we get one more day of data, and we say, well, you know, now we can draw this line and this line because we have additional points that make that a likely set of trend lines. Then we have today, at which point I thought it was very interesting. We started out coming right up and tagging that top line, and then we abruptly turned right back down and tagged the bottom line. Tried to bounce there a couple times, could not do so with lasting effect, and then eventually took out the bottom line, not by a big margin, by roughly 1/3%, but still took it out. Then did a little reversal down here at the bottom, which if you want to draw this little line here, you could say that was kind of setting up the little reversal. And you can extend it and say maybe that's why we ended there, but I'm not sold on that. Well, what we did see was a back test to this broken line right here. So I would now say, let's trust this pattern to do what these patterns tend to do, and that would be to produce a move downwards that is the same degree from where it broke down, which would be right here, as the height of the pattern from the first reactive move. Well, I'm kind of calling this sort of the first reactive move instead of this, but I'm splitting the difference a little bit, so I'm going to go with this. And from this line, we now know to expect a move down to roughly, I think we can call it 1820. But there's something else that I want to point out, and that is, if we take this pattern and then what has happened since about the 27th of December, I think we could we could draw some additional trend lines that may help us understand what may be taking place in a little bit broader perspective, or at least give us some signal lines that we can use to help us understand what's going on. And what I mean by that is this. Let me grab my little tool here. And since we know we got two pretty decent touches right here, this I think we could consider a short-term bottom, and maybe where we bounced here today. I want to extend this line down, and I'm going to get rid of these two because they're done. We're done with those. Then I want to take a look at some tops, and since this is a back test, I'm going to go ahead and call that a top today. So we're going to start our line here, and we're going to draw it back to where we had our end of the year high. See what we're getting here? Now, this looks so far to be like a descending wedge. And descending wedges, we know, typically resolve to the upside. And I won't go into all of the psychology of it, but I'm going to do one more thing, because you remember, and this is something I think this is something that is unique to sp500chart.com and unique to the way I do things. I really do believe this. You remember how we were looking back here at this little midline? And isn't it funny how this midline was where that second high today could not overcome that, and after that failed, that's when we broke this bottom line. I'm not saying that these midlines are extremely important, but I do believe they help us to get a better read on the validity of some of our patterns. So with that in mind, I am going to snap a midline as best I can inside of this thing. Okay, I think that's pretty close. And what I'm seeing is, again, this line seems to be producing and having some effect as we get squeezed down into this wedge, if this continues to be a wedge. So what this means is we started with a fairly swift move, then we had a little rally, then we have a little less of a move. Look at the distance from here to here and compare from here to here. And then as things get even more squeezed down, it could very well be that we end up with another bounce down here at some point, maybe even at a point late tomorrow where we meet that minimum target around 1820. But the idea is this: if these two lines continue to hold their shape and continue to keep the S&P in between them, then I would look to this top line when it breaks, if it breaks. I'm going to say when, if it breaks. Well, at some point it will. But if it were to break before this bottom line down here breaks, then I would say likely this selling is about to be over. And I would expect at that point a move upwards. Now, I'm going to do one more thing that I think is a little bit unique. We're going to extend these lines, because often when you extend lines of wedge or triangle patterns, you end up with a level at the apex that has some technical significance. And you can see that that lines up very nicely with this light blue line. And what is this light blue line? That light blue line is the level that we were using, because that was the previous high set in late November, or was it the 1st of December? I think it was late November. That was our previous high that we were kind of using as a tool to gauge whether or not this head and shoulders pattern was indeed failing to produce a downside reaction. Now, let's back out just a little bit more. And I want to show you one more thing, and then I'll let you kind of digest all of this. I am making two brown lines here. This one right here moved on me just a little bit, but basically this line defines our last 1, 2, 3, 4, 5 tops. Okay? This bottom line defines our last 2 bottoms. I'm just showing you this on the outside chance that we could be forming a large and extended rising wedge. And if we are, and we'd fail to get over this top line, and at some point take out this bottom line, then we would be looking at a likely significant market correction that I think would probably scare some people. Doesn't mean that the end of the world, but if this line breaks, then I think that what we would be seeing would be a likely end to this nice year-plus long rally in the S&P. At least taking a significant break from it, and in setting up an intermediate downtrend where we would be giving up a likely a healthy little chunk of the gains. But for right now, in the short term, I'm looking at this, I'm thinking, sure looks like a descending wedge so far, and if we stay in between these two red lines and get up over this one, break out, then that should be signaling a move to come back up and to re-challenge that 1848 level that was in place before this pattern started to form. So guys, there's your video for January 6, 2014. Appreciate you taking time out of your day to watch it, and please hang with this. Let's see what 2014 is going to bring. I believe I just got this hunch. That this year is going to have some twists and turns. 2013 was just too straight up. I think 2014 is gonna throw some people, and I think it might. If it does it fairly soon in the year, it could be a healthy thing. So guys, thanks for watching. Take care. Thanks for your support.